So the budget, what's hot and what's not for small business? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And this time of year, sometimes twice a year, depending on what's going on, we get like an autumn statement and a spring statement. But this one, the budget that's often gets the most press, is an exciting time because although it's the Chancellor standing up and telling us, okay, this is where we are with the country, this is our plans, a lot of the time they're tax related. There's things that we get our teeth into. We're able to plan for business owners and tell them the good or sometimes the bad news, get excited, heckle at the speech or not, depending on what's going on. We have all the office round to view it. It's like quite a big thing. This time around though is a bit flat, but what I do want to talk about and tell you a bit more about the landscape of what's happening over the next years is to remember that the autumn statement back last year had a lot of sort of bad news in it, and what was not said in this budget is almost as important as what's said. So let's get on and I'll tell you all about it. But before I do, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So let's start with the headline announcements. But before we do, just remind that this video is recorded very shortly after the actual thing itself. So there's not a lot of documents available. There's a big budget document, but a lot of these things, there's no detail. So you will hear me say, we'll see when the detail comes out, but this is where we are, headlines at the moment, sort of instant reaction. So firstly, one of the big announcements was that the pensions limit that you can contribute every year to a pension is going to move. Now, for most people, they're not even concerned about this because the limit's currently £40,000 a year. So if you're in that awesome position where you can contribute £40,000 a year and you're thinking, oh, I wish it was more, you're winning. They're moving it up to 60,000. So obviously for a lot of small business owners, it's not really an exciting thing, but for those of you who have been quite successful, have got a bit of a mature business maybe, that's going to be maybe something exciting to you. And on top of that, which was a bit of a shocker actually, they've said there's currently a cap of just over £1 million for a pension pot before you start incurring tax charges if you carry on paying into it. What they've said is they're scrapping that completely, which actually is quite a good thing for senior doctors and people like that. So there is some other thing around it, but ultimately for a lot of small business owners, it's not even a real consideration for those of you right now who've got more important things on your plate, but it is there. And I think that was the biggest shock. And of course, it's going to make the headlines because it's going to look like tax cuts for the wealthy, which in effect, that's the people it's benefiting the most. So that's happening, but good news if you're in that position. The other headline announcement that's not tax related was really this idea that there's going to be funded childcare is going to be extended, so 30 hours funded childcare, and what you're going to be able to do then is put your sort of under 5 years old over about 9 months, I think is what we're seeing from the document. Again, details light on this. You're then going to be able to get 30 hours funding. Now, for business owners, the reason I think that's so great is as somebody who built a business with 3 children, you know, that over £1,000 a month childcare bill, that is something that's really going to help business owners be able to get to work and get it done. Also, I think a lot of the workforce being working parents means that there is actually incentive to do those extra days. I remember many of our team being working parents meant that what happened was you ended up in a space where you'd be like, can you do these extra days overtime? They wanted to do it, you wanted them to do it, but it meant they earned £8 because of the childcare costs. So this could potentially really help. However, on the flip side, we also work with quite a few nurseries and childcare providers, and I'd say the reception is mixed about this at the moment because how much they're going to get paid for this, can they actually find the resource to deliver it and all the rest of it, because the demand's obviously going to be there. It's just whether that can actually be delivered. So both sides of the coin for small business owners, but ultimately I think that's quite good. The main two main concerns that most people have had looking at this is one, it's only in England, which I found really weird at the moment. So a lot of people outside of England are concerned unless that suddenly gets widened, but currently it's only England. And then secondly to that, it's whether it's the timescale involved. So they're saying it's going to be staggered, so over a few years. So it's going to take a couple of years for people actually be able to benefit fully, ultimately, for it. So, but as an overall concept and policy, I kind of thought it was quite a cool idea. And that's kind of where the coolness really stops, because outside of that, it was really quite flat. So I'm going to quickly highlight for you a couple of key things, and then I'm just going to tell you about the landscape to remember where we're at and what's happening from April for businesses based on previous announcements. So the first one that seems to be making the headlines, which I think is wrong, is I saw like a Financial Times article saying £9 billion tax break for business. Well, bearing in mind that 99.9% of the businesses in the UK are small businesses, it actually is really only a tax break for that top, small percent. Because what they're doing is this thing called, they're replacing something called the super deduction, which was an awesome scheme actually, that's been around for a little bit. And it ends on the 31st of March. We've done previous videos on it, but if you bought new unused equipment, let's say you want to refresh your MacBook in your small business, in your limited company, it's limited company only, you effectively got 25% off, which matched to the fact that the corporation tax, as we're going to talk about, is increasing to up to 25% from April. So it worked out quite well, and they gave you in advance. So it was very good if you were refreshing equipment right now. That's ended at the end of March. It's not being replaced, but they are replacing it with a new 3-year scheme that they're labelling full expensing. Now, full expensing in reality is almost what exists at the moment for most businesses. It's called annual investment allowance. So what it allows you to do is if you're buying new kit, so you're buying that MacBook, if you part with £2,000 and buy a new MacBook, what would normally happen without it is you'd have to get tax relief on that £2,000 over many years, because they say, well, it's going to last you many years, so we're going to give you the tax relief slowly. What this allowance allows you to do, the current annual investment allowance, is it says you can write the whole lot off in year one when you buy it, which actually makes sense for a lot of people, because often, not always, you're parting with the cash in that year, so it makes sense. So it's just allowing you to get relief when you spend, or when you at least commit to that expenditure. So that's really cool. That's existed. It's got a cap at £1 million. So again, for most small businesses, you're not spending over £1 million. That system's still there. It's not going away. So that's where we're at. The full expensing, on the other hand, is going to be slightly differently, and we don't know what caps and things aren't there. But what it does look like is it's just going to benefit the bigger businesses because the cap won't be there. They can use that instead of this annual investment allowance. So there are some other potential tweaks between them, differences between the systems. But again, if we're talking about small businesses, it's not going to really be that exciting unless you are one of those kind of slightly bigger small businesses like we have had in the past. We've had like haulage companies and people like that where they are spending more than £1 million on trailers and things like that. A little bit different, but for the vast majority, it's going to feel the same as what we've already got, but that was announced. So when you see these headlines about business tax breaks, it's not as good as it seems. So talking of sectors the government want to support though, if you're in the TV, video games, audio visual, as they call it, industries, there's still some really good tax credits there. I'm not going to do the detail of that in this because it would be a long video, but ultimately there are some incentives if you're in those industries that are being tweaked and extended, so keep an eye on that. And also, if you're thinking of setting up a business, let's just say in the north of the UK, because that's likely where these 12 new zones are. There's 12 new investment zones being set up. And again, there'll be various tax breaks. They were talking about national insurance breaks, maybe business rate breaks, things like that. So if you are in that place and you think, actually, I'm looking to locate myself somewhere, just keep an eye, do a bit of a Google as this progresses and look for investment zones, because you might find there's a tax reason to do it. Again, details light at this point, but there'll be an interesting thing to keep an eye on. And talking of things to keep an eye on, over 50s. So they're concerned that there's an sort of a economically inactive, I think is the key phrase, set of the UK that's over 50 that just decided not to re-enter the workforce, particularly after COVID. They're like, no, I'm cool, got pensions, got property, whatever, I'm just going to just chill. My experience of that is we have a lot of business owners in that bracket that reset up and want to do business, which is really cool. But what they're looking at is what they call returnerships, they're calling them. And again, details light, but it looks like you'll have access to skills, retraining, maybe some sort of like different style of apprenticeships. So keeping an eye on that, because I'm always interested in skills and education, how people can get into work. But ultimately, how that's going to affect and how long that takes to work, we shall see. But yeah, so if you're over 50 and thinking of doing those things, have a look at returnerships. You never know, there might be something in there. I'll certainly be keeping an eye on them, seeing what the impact is as an employer, to see what's available to kind of, and what pool of people are around, because I think it's a really cool age group with a lot of experience. Now, in terms of announcements, before you go anywhere, that was it. But, and this is a big but, what wasn't in the budget was any reversals. And we kind of got into this stage where we're kind of used to reversals. There aren't any, which is a bad thing, because from April, we've got a corporation tax rise. Somewhere between 19 and 25% is your limited company rise. That's what your tax bill is going to look like, depending on where you are. So if you're under 50k profits, for example, you're on 19%, and then it sort of staggers as you go up. So that's still happening, no reversals. We've got the super deduction gone, so that's gone. We've got the fact that your dividend allowance, so if you pay yourself by dividends, currently the first £2,000 a year is tax-free, so a zero rate. Now that's been halved to £1,000, and then the following year it's been halved again to £500. So that's still happening, so that's your money in your pocket still getting hit. They also didn't reverse the extra 1.25% they put on dividend tax when they announced a national insurance rise. They reversed the national insurance rise, but not the dividend tax rise. So that's another hit to your pocket on dividends. So it's still good for a lot of people to have dividends as income, but it's nowhere near as good as it was, say, 6-7 years ago, where it was just awesome. So, but it's still genuinely better. But I would say it depends on where you are. If I drew you a graph of what's better, salary, dividends, mixture of both, it goes all over the place depending on your earnings levels. So if you're doing quite well for yourself, it's worth investigating the different options. So that's something to bear in mind. If you're selling bigger stuff, and I say bigger stuff doesn't necessarily mean tangibly bigger, but things like capital assets as they're known. So crypto, shares, property, rental properties, things like that. Currently, you get a separate annual allowance against the profits. The first just over 12 grand that you make in profits on those things doesn't pay any capital gains tax. That's been slashed in half to 6,000 and slashed again to 3,000 in the coming years. So if you're in those kind of assets, bear in mind that that is going to affect you and you're going to end up paying more capital gains. So we've got that, and then the landscape of the fact that we're in a cost of living crisis, cost pressures are rising, people's wage demands are rising because they need to be able to pay their bills. You probably, as a business owner with a team, will want to pay them more to make sure that that's all and everyone's happy, because that's always a massive concern for everybody. So there's all these things, and then you might need to raise your prices, which is not helping inflation. It's a very difficult time to balance all of this, and I don't think in the budget there was particularly anything that's really helping at that ground level. I've seen a lot of stuff that is really aimed at a lot higher level. It's aimed at multinationals and attracting those kind of businesses, which is important because just over half the employers in the UK are those big businesses. But the other half of the employers, ground level small businesses that we work with every day, and that's the area I think has just continually got more and more taxed and less support. I would say, if I looked at the policies maybe over say the last 7-8 years, I think before that it felt quite a pro small business environment. These days in the UK I think it's a really good regulatory environment, but we've got quite a lot of reporting requirements and the taxation landscape does look a lot different. So interesting times, and it's definitely one that's going to be a challenging time for all business owners, I'm sure, but we're here to keep you informed with anything that might actually be cool and exciting. So please do share this video with anybody you think needs to know this info, and I'll see you in the next one.